What I'm about to show you might be the most powerful algorithm we've developed under the QuantVue umbrella. In this video, our lead developer, Anthony, is going to break down our brand new Qkronos strategy, how to get it set up, best settings, all that good stuff. And the best part is about this one is that it's compatible on normal candlesticks, Heiken Ashi, built specifically for futures and FX traders, especially prop trading. And in fact, the part 2 of this video is going to break down how to use this with our prop firm automation solution. If you're new to the channel, my name is Mike Santucci. I am the founder and CEO of QuantVue. We make advanced indicators, custom automation, and more. We've got over 5,000 members in our trading community. So be sure to like and subscribe because we pump out videos like this every single week. Let's get into it.
All right, everyone, we're going to be looking here at the setup of the Kronos algorithm as well as tiered entries and exits using the new prop trader software. Now, if you don't have the prop trader software, you can ignore that part of the video and you can use whatever API software you're using, right, through AutoView or whatever, because it'll pick up the quantities for you. But I'm going to go over that for new version 1.3 of the prop trader as well. So right here, we've got it on the screen. Very first thing that you want to do with Kronos, go into the settings, and again, this is Kronos stages. It's still in the stage testing, but it'll say something a little bit different when you're looking at it. Don't worry about that. Very first thing you want to do when you come into the settings here, go to Fill Orders, turn on bar close. There we go. That fixed things up a bit. And now when this runs, you're going to want to run this on Heiken Ashi. And the reason why you have to have on bar close on is so that it will backtest properly. If you don't have that on, it's going to put its entries on the open of the following bar, which is not a real price. The open on a Heiken Ashi candle is the HL2 of the candle prior, so it's not a real price. Therefore, you have to turn on bar close. And as long as these other ones are calculated as well, which they're turned on by default, then your back testing is accurate on this, more or less accurate. Now, I've calculated the slip in my own accounts, and it's quite low. It's about the same as it would be on Renko or regular candles, so the fills and the back testing is pretty much on par. Now again, it's never going to be perfect to what you have here in your net profit, right? It's never going to be perfect. You always have a little bit of slip, but the curve more or less will be just about right. So we're going to go through the input settings here for Kronos. Now you'll see a few things you're probably familiar with right here at the top, the time preferences. So we have your time string, only trade within a specific time frame, and you can force close at the end of the time string, right? So if we have ending at 1540, you can force the trade to close or not force close, which means it will naturally close the trade that is open, and then it will not open another one until the beginning of the next open time frame. Now that's pretty useful in certain circumstances. I force close them. It's a little bit better on the drawdown usually, but you can choose that however you'd like to. You can restrict the dates for backtesting. That was a hotly requested feature. So if you want to change which days it's going to backtest, you can put that right here. And then when you run a deep backtest, it will only show these days. As long as the settings you have down here for deep backtest include those days. So that's that can be quite useful, but make sure it is off for live trading. Now down here under strategy settings, we have these L1, L2, E1, E2 coefficient offsets. And so these are offsets. There is built-in variables behind the scenes, and what you're going to do is offset from those variables. There's reasons why I did that. It doesn't matter why, but that's how these are designed. And if you move this over this, it will tell you, minimum -5, minimum -2, max +3. So it will tell you in what range you can put the offset. So, if you wanted this higher, you could go just 2 right there, and then it would be the baseline +2. And you see it changed what we have going on back there. Now, I'm going to be honest with you. These will probably never need adjusting. Now, I'm sure some people are going to go and play with this and mess with it as much as they can, but I would caution you on that. The more you mess with things and the more you try to quote dial things in, the more you're likely to overfit, which means it will backtest perfectly, but it won't perform in forward testing because it's just fitted around trades in the past. So my advice is to simply leave these at 0. The code is built to adjust dynamically to the movements in the market, so you will likely never need to adjust these. Now, there can be times where that is different, and you may want to adjust them, so that's why it's included in here. And I'll let users kind of post their own settings under the automation chat. However, in my opinion, you can leave them at 0. We do have use hard stop, and this will turn, surprisingly, this will turn stops on. Let's see, we actually didn't have any stops here for me to show you. It's good, right? I want to have stop outs if you don't need them. Let's see, here's one right here. So I can show you. Let me turn that off. Right there. So you can see this actually went on to have a successful trade. But, although it is still quite profitable, as you can see, I like the hard stops on, personally. I like to use them, and it gives you a smoother curve. Generally, you'll have, you'll have some changes based on what you're doing, but I like them. Now we have all these multipliers right here: hard stop multiplier, trailing stop, trail offset, and multiplier length offset. Let me explain these. These are all, like they say, they are multipliers. The algorithm looks at the markets. It figures out what the volatility is in the markets through a couple of calculations, and it says, okay, we're going to use volatility calculation times the multiplier to determine this. So you will always have different sizes here based on that multiplier. So we come over here and we can look at this. So you're going to see the stop multiplier is set at 1, but this is bigger than this. And that's because the volatility in the markets was different at that time. The volatility was different. So we do that so that we can dynamically adjust to the size of the volatility so that we can give it more room if it needs to move further. Or if the volatility is very low, we can give it less room so that we can keep those losses smaller during that time frame. So that's why it does that. Now we have the volatility the same way for the trail stop engagement and the trail offset. Explain what those are. So red is your hard stop line. The gray is your entry price, right? The blue here, excuse me, I'll look at the black first. The black is trail stop engagement. Okay, so once you hit the black, that's where the blue starts. You see that? So we hit black. We actually come up above the black with our price. The black disappears and the blue starts. Price has to reach black to engage the trailing stop. Once the trailing stop is engaged, the blue indicates the trailing stop level. Okay, so you're going to see price came to here. It engaged trailing stop. Trailing stop was here. It followed price up until it finally actually hit it there. So that's how those work. That's the difference between the engagement level, which is black, and the trailing offset, which is the blue. We'll come and look here. So the trailing stop engagement multiplier and the trail offset multiplier, in my opinion, should be fairly close, because you can see once this comes into play, it's very close to your entry price. So it may not keep a lot of the profit, but that's what our tiered exits are for, and I'm going to show you that in one moment. We also have multiplier length offset. You can change the length of the multiplier. You can change the length of the volatility calculations for these multipliers. So if you set this, the minimum is -7. If you set it to -7, it will look much closer. So we'll do that real quick. You'll see how it changes. No, it actually didn't change too much on this one. But you see how this is really small, because it's just looking at the few candles just prior. So it's really small, right? There's over here, we're looking at these candles, and these were really big candles, a lot going on back here. So this is a bigger number. What we can do is increase this. We'll put it to like 10, and it'll look a lot further in the past. But we can see right there, it looked even further back, and it's actually a little bit bigger. Okay, and it changes everything. So you're going to see how the engagement levels have changed, how the offset has changed. It changes everything. Now again, I recommend you leave this at 0 because in the background it is set on numbers that I have found repeatedly with algorithms and backtesting, data science, data analysis. These are set with numbers in the background that I have repeatedly found to be correct or to at least be highly profitable. So now let's look at our tiered exits. And for tiered exits to work, we have to be trading more than one contract, of course. Otherwise, there's nothing to tier out of. So we'll go to 2. And right here, we'll click Allowed Tier Exits. And we'll change this to 1. Okay, now we've got some new stuff on the chart. Let's go look. Now we've got this orange line. And the orange line indicates the engagement level for the tiered exit. And you can set that right there. Exit engagement multiplier is 1. So that's going to engage. Once we come up to here, tiered exit is in play. And once it determines that we may be shifting trends, it will close part of it. Now as it comes up here, we're in profit. Once it says, uh-oh, we might be changing trend, it will close that part of the position. Another example here, see we're going long, and right there at the top it says, uh-oh, we might be changing trends, so it takes one off the table. And that ends up being a bigger win than the final close. Same thing here, we go down, it says, oh, we might be changing, and it actually catches at a pretty decent place. But it closes there, closes there. You know, it's not always perfect, but pretty good. Here we get a better close than the final. And overall, it's going to increase your profit factor and the smoothness in that curve. So we'll just look here real quick. Let's run a deep. We'll compare side by side. Okay, so there's that right there. We've got 1.6 profit factor, 205 net profit. Let's turn them off. So 205, 1.6, that's off. Generate. Let's see if it can beat 205 and 1.6. I don't think it will. Not at all. Net profit 119 is and 1.3. You see how much more jerky the curve is here. Percent profitable down to 42%. It's actually perfectly fine for an automated algorithm. So this, I want to be clear right here, this is actually a pretty decent curve and pretty decent results for automation. But turning on the tiered exits just really enhances this algorithm, which is something I've found again and again and again throughout the markets. That sort of tiered exiting is a big deal for algorithms. Okay, and there's a few things here on Kronos that are new, and some of these will be coming to the other algorithms as well. But here's some new stuff. We've got profit limit, loss limit, and trade count limits in here. And these are designed for use with prop firms that have limits for each day. So they have these weird consistency rules, or you can't have more than, you know, whatever percentage of your profit in one day, which is kind of bizarre to me. And then, you know, they have loss limits as well. And this will keep you away from losing your account, hopefully. Now, it's very important that you read this tooltip, okay? Read tooltip, important info about limits, read tooltip. It's very important that you read this tooltip. It is important to note that while the strategy will close to the profit or loss limit, the exact limit cannot be guaranteed. Thus, it's always better to set it to a lower number than your actual limit, and as you approach the limit, keep an eye on the account. Okay, so that means if you only want to make $2,000, then set it to, you know, like $1,800 or whatever, and then as you come closer to that limit, watch your account to make sure it flattens out before it gets to whatever it is, right? And then secondly, this is extremely important. I was talking about overfitting earlier with those coefficients. Do not use these limits to dial in the strategy. It will cause overfitting. Only use these to keep away from prop account limits. Okay, so don't sit here and try 15,000 different numbers trying to find the one that gives you the best backtest. That again is going to break the algorithm and cause overfitting. Overfitting is the biggest reason why strategies fail after you put them on here and they look really good in the backtest and you start running them. Overfitting is a reason why they fail. Okay, don't do that. I'm going to show you how it works. And I got a couple of things right here. Trend coloring, it's just going to, here actually, give me a sec. There we go. Now you can see it. We've got green and red showing like kind of the trends in the market, and it's just based on some background math, but it helps show you where your entries are. So that is the trend coloring. There, you can enable and disable that. And then we've also got the stop levels. So that's all of these lines here on the chart, right? So you can remove those if you really want to. The limits table, okay, that's going to show you this stuff right here. So we can click that. And it came on right over here. So it will show you what the equity in the account is. That's based on the starting equity that you put back here under initial capital. It shows you current equity, profit limit enabled, yes or no, profit limit to go, and the same thing for loss in daily trades. So you can watch what it's doing on there. And we'll go ahead and enable these, and I'll show you. So right there, see that? We went partway through the day, and it's like, oh, profit limit reached. That's it. We're done. And it can say profit limit to go was negative 140. So it was only, it went over a little bit. So keep that in mind. So loss limits, we'll click that. And it didn't hit any loss limits on Friday because we didn't have any losses. But, oops, I want to do that. Look at some previous days. Let's see. Every now and then we hit one. Yep, there's one right there. It'll hit the loss limit. Yeah, the previous day it just did not do fantastically. This is really, really rare that it does this, but you know, sometimes you lose them. Generally don't see this losing on days, but nonetheless, that hit our loss limit right there. And we've also got trade count limits. Right? Click that. Okay. And that was it. It stopped out and did not take another trade because it's limited to one trade per day with that setting. And again, these settings are just to help you avoid prop trader rules, right? So keep in mind these are set to dollars, and your dollars are going to change based off of how many contracts you're trading and what type of contracts you're trading, right? So if you're running this on NQ, but then you are trading MNQ on your prop trader software, keep in mind that you're going to have to do the math to figure out what the limit over here should be if you're running an NQ contract to stop out at the right place, right? So just keep that in mind that this is dollars of the contract that's currently selected right here. All right, and then finally down here we have custom alerts, and this is where we're going to get into how to set up the alerts for tiering on the prop trader software. And now again, if you are running different API software, then that is going to be up to the syntax that they provide. This section is only for the prop trader.
So that wraps up part one of the new Qkronos strategy. If you want this exact strategy, it's part of our elite toolkit. You could try that 100% free for 2 weeks, free 14-day trial. Link is going to be in the description below. Stay tuned for part two because we are going to show how to configure this on our prop firm automation solution. Be sure to like and subscribe if you haven't already. We'll see you in part two.